All right, all right. Hey, everybody. It's a special July 3rd, Wednesday, All-Star Options Jam session. Glad you're here. It's a holiday week. It's a weird holiday week. I'm very confused with the trading hours this week. We have a half day trading day today, and then the market is completely closed tomorrow, Thursday, and then we're open a full day on Friday. Look, I don't know about you guys, but I'm going on a little vacation. I'm heading to Vegas, going to see a concert. So I'm not doing any trading on Friday. Friday, as far as I'm concerned, is a holiday. Anyone who's making any speculative bets on Friday this week, you might have a problem. All right, just saying. All right. So anyway, today is July 3rd, 2024. And what we do here in the All-Star Options Jam session, if you're new here, we do a little high-level review of what's going on in the market, just a quick little lay of the land, and then we review action in positions that we have open in All-Star Options. We review trades that we've made any adjustments to, any trades that we've exited, maybe for a profit or a loss. And then we go through and update stops on some positions that are working for us, or they just need updated stops. So we do that. And then we'll do a quick rundown of new trades that we've put on at All-Star Options over the past week. But before I do any of that, of course, I have to hold on, my sound went on. Sorry about that. But before I do any of that, guys, I have to drop the old disclaimer. Everything we do here is for educational purposes only. I'm showing you what I'm doing with my money, and I hope that you learn something along the way. All right, so let's go to the charts. Let's start at the top. Let's look at the S&P 500. This is the SPY, the ETF that tracks the S&P 500. As you can see, we are on the cusp here of breaking out again to new all-time highs. We had a little bit of a consolidation for about 2 weeks, we'll call it, but we're knocking on the door of new all-time highs here in the S&P. If we bring up the Qs, which is the Nasdaq, it's already at fresh highs there. So by all accounts, at least at the index level, we are in a confirmed bull market now. On an individual stock basis, it's not as clear cut. These indexes are being driven by many of the large cap names. No surprise, this is an old story, right? We've been hearing about this for years, really. Some of the stocks down the cap scale, whether they're mid caps or small caps, aren't necessarily participating in the bull market with as much vigor as we would like. But hey, we can still play the big names, right? We can play the Microsofts and the Amazons and the Apples and all that if we want to. There's no rule that says we can't. But hey, we're in a bull market. So that being said, I am leaning more towards wanting to have bullish trades on. I do have some bearish trades on the books, if nothing more than for portfolio hedges. In fact, I put a new one on this week, which we'll talk about. But the odds are favoring the bulls here. And by the way, guys, I just want to point out, I've got the chat open here in YouTube. So if you have any questions about anything we're talking about, throw it in there. I'll do my best to answer. Hey, shout out Stephen Roman. What's up, Roman? Good to see you, buddy. All right, let's get into action we've had this week. Let's start with, look, there's no good news here. We have two trades, both of them bad news, but that's okay. That's okay, because we have other good news elsewhere that's going to make up for it. But in no particular order, let's talk about DR Horton. This is a trade that did not work for us. I mean, right out of the gate, right? And I say this all the time. If I'm going to have a losing trade, I want it to be a losing trade quickly, right? I just want to rip the Band-Aid off, get out as quickly as possible, not only to limit the losses, but also just to free up my mental bandwidth to focus on the things that are working, right? We want to do more of what's working and less of what's not. So if trades aren't working, I'd rather they just get off the books quickly. And DHI is one of those. We got into this was a little bit more of a creative trade. We wanted to be long the November 170 calls, which we did, but we financed that trade by selling some July 140 puts and some August 170 calls against it. Maybe we got a little too cute here. Maybe. Okay. It bit us. When we put the trade on, we did it for a 26 cent next net credit to get started. So we already, I'm sorry, net debit, excuse me. It was 26 cents net debit to get in. Well, 140, a close below 138 was our line in the sand, and we got that a couple days ago. So we closed the trade. It cost us 581 net to get out. So all in, this trade lost us about $6. Not ideal, not what we want. Maybe one of the larger losses we've had in a while, but still within the realm of what's acceptable for our portfolio. We sized the position in such a way that if we suffered a large loss on the position, it wouldn't necessarily hurt our portfolio all that bad. You guys have heard me say this many times. I'm a broken record, but if you're a first timer here, I generally size my positions in a way that I can't lose more than 2% of my portfolio on any one trade. And even that's a bit much for me personally. I generally like to keep it around 1%, but I will risk as much as 2% depending on, either if I'm feeling really confident about the trade, or maybe if it's just a higher price stock or higher priced option. It just, there's no way to get it any smaller than that. But 2% is certainly my line in the sand. I don't want to risk more than 2% on any one trade. So we're out of DHI. That's DR Horton. So sayonara. See you later. Next up, Rocket. This one, man, this one really looked like it was going to work out great for us. We got into this trade back on May 3rd. We bought the September 15 calls for $1.30, and for about the first week, it was looking great, especially early on in this candle. Early on in the day, it was traded as high as 1550, but then it rolled over on its intraday. That was ominous. Came right back into the area where we bought it, and then it did it again. Right? We had another run, another great candle. This time got us up to nearly $16 intraday, but then it rolled over and closed on the lows. That's twice. Those should have been the red flags, right? Fool me once, shame on me. Fool me once, shame on you. Fool me twice, shame on me. I got fooled again right there. So the stock closed below our stop loss level, which was 1350 just a couple days ago. We closed the position, got out for 50 cents. Hey, we paid $1.30. We got out for 50 cents. Better than a 100% loss, which again, when I buy calls, I say this all the time, especially when I buy calls, I size the position in a way that I fully expect that there's a very good chance that these calls could be a zero, right? Like if the stock reverses on me hard, all of a sudden, the fair value of the options might be, let's say 50 cents, but there might be zero bid, right? Depending on what market makers want to do. So I always size these positions in a way that, if it's zero, again, no more than 2% hit to my portfolio in total, ideally closer to 1%. So the fact that I got out for 50 cents instead of zero, that's not a win, but that's the kind of loss I'm happy to take anytime. All right, so that's it for closed positions this week. Now let's get into our updated stops. We have a number of positions to update. Let's start with APH, Amphenol, only because these are July expiration options. These options expire in a couple of weeks, and so we need to be a little bit more aggressive with our trailing stop. The great news here is that we're already sitting on a very nice win in this trade. We got into this, into the July 60 calls back in February, late February. We bought them for 80 cents. And this thing, I mean, other than one little test of its 50-day moving average here in April, this thing's been nothing but a monster for us, working exactly the way we want it to. According to our plan that we laid out on day one when we put the trade on, we wanted to sell half of our calls when we got above 65, which we did on May 15th. And we wanted to sell half of our position. We did. So we locked in $6.87 effectively. These are weird numbers because there was a 2-for-1 stock split along the way, by the way, guys. In fact, when we actually got into this trade, we were long the July 120 calls. But there was a 2-for-1 stock split, so all these numbers are adjusted. So effectively, we sold half of our position at $6.87, and we bought them for 80 cents. So we've already locked in a great win. The calls that we have now, the half of the remaining position that we have on now, that could go to zero. We don't want it to, but it could. And we're still sitting on a very nice win, one of the best wins of the year for us. But obviously, our calls are not worth zero right now. They're still $7 in the money. Again, we're long the 60 strike calls in July. Stock's currently trading at 67. So we got $7.50 of intrinsic value in these calls right now, but we don't want to give much back on that. Okay. Again, we're closing into expiration. So short leash going forward. As we roll forward, as we get closer to expiration, I will be trailing a mental stop. I don't leave a stop loss order in the market, not with options. That's a bad idea. I just set alerts on my trading platform, and when certain price levels are hit, then I go in and take action and I work my exit using limit orders. But that being said, our current stop is 66.50. That is the lowest price that APH has seen over the last 5 trading days. Going forward, I will keep raising my stop when I can to be right below the 3 to 5 day, previous 3 to 5 days low. That's my hubris. Was that the right word? No, that's my metric. That's my algorithm, so to speak, for trailing stops. I want to keep the trailing stop just below the previous 3 to 5 day low. I use a little discretion. Okay. It's not perfect. It's not an exact science. But right now, 66.50 is my current stop. I will be updating these stops hopefully as the stock moves higher over the next week or two. And I'll update those stops in the chat room for everyone. So if you're not in the ASO chat room, are you even here? Come on, get in there. For members of All Star Options, you can get it. If you're a member of All Star Options and you're not in our chat room, shoot me an email. We'll get you the instructions to get you on there. info@allstarcharts.com. All right, so the stop is updated in Amphenol. Now, let's go to the rest. And again, in no particular order, ADI, we are long December 240 calls. We got into this trade back in May. We've had a very nice gap in our favor a little while back. We sold half of our position at 14. So we're free riding in this position too, just like Amphenol. We haven't locked in any gains. We've locked in the worst case scenario here is it's a scratch, right? Because we bought them for $7. We sold half of them at 14. That paid us back all of our original risk capital in the trade. So now whatever we can sell the remaining half of our calls for, that's pure profit. Hopefully it's something more than zero, right? But again, the worst case scenario is ADI can trade, it could go to zero tomorrow. Worst case for us is we end up the trade in a scratch. But right now I'm moving our stop up to 220, which approximately corresponds with the rising 50-day moving average right now. I would like to see ADI recapture highs that were set. If it gets back above 240, then we will use this area here as our next stop loss level. If you want to be more aggressive, I don't hate using 224 as a stop. But for me, I'm going to give it a little bit more latitude. I feel like it's earned that since we've already sold half of the position. I'm less worried about this one now. But for 220, if we're below 220, we don't want to be in the trade anymore, regardless. And whatever we could sell the calls for at that point, hopefully something that will be pure profit for us. All right, moving on. Bank of America. Finally, this thing's breaking out. I feel like this thing's been just toying with my emotions over the last 2 weeks. But yesterday, I feel like we got a decisive breakout. It's moving in our direction. I'm feeling really good about this one. We're long the December 45 calls we paid $1 for. We're now moving our stop up to 39. All right, so 39 is our new stop loss level in Bank of America. Hopefully, we never see that level. And if this breakout follows through, we won't. But for now, the stop's at 39. All right, next up, eBay. We are long the October 55.65 bull call spread that we paid $250 for. This trade is not going anywhere for us at the moment. We are raising our stop now to 52, which is getting pretty close right now. If it loses the 52 level, then that means we're breaking lower out of this consolidation, and that's not a good sign. That's no bueno for our position. So risk management is job one. If we're below 52, we are out. And finally, Google. Google's working great for us. We have a protected in quotes, a protected risk reversal where we, a typical risk reversal that we typically do is we sell a naked put and use those proceeds to buy a call. And we like to do it for approximately a net credit generally. This one's a protected risk reversal because we actually, we sold a put spread, which is defined risk. and we use those proceeds to buy a call spread that has a capped upside. So our downside is capped, or our downside is limited, which is great, but our upside is capped. That's the trade-off. But either way, we put this trade on for a 30-cent net credit, and it's been doing nothing but chug higher for us. We got into this trade back in mid-April. We got a nice earnings gap here that helped, and now we are moving up towards our price target, 190, guys. If Google gets to and through 190, I'm going to take the whole trade off and book the profit, whatever it is. Okay. Well, I mean, we're sitting in profits here now, which is nice. If we get to 190, I'm going to take profits there because our profits are capped above 190. So no sense in trying to squeeze out an extra nickel or a quarter or whatever. Let's just take it off. Me personally, by the way, guys, I didn't put this in the trade plan. But me personally, I already covered the short put spread. I was able to cover it for I think I covered it for 20 cents. Could probably cover it for even cheaper now. It was just tying up buying power, and it wasn't really adding any more to the position at this point. So I closed the put spread. If you're in this position with us and you're still in the put spread, maybe consider taking it off. It's really cheap. It's not going to cost you much. And at least it'll take some risk off out of the trade. But more to the point, 190 is in our sights. And if we get there, we'll be taking profits. So that's the update on all of our stops. Now let's review quickly new positions that we've put on since we last spoke. Now these new positions, again, for people who are new here, we publish a detailed trade plan for every one of these positions. We tell you why we like the setup, what option strategy we're using to express our thesis, where our risk management levels are, how and why we will exit the trade for a loss. And we also lay out the plan for taking profits, if there is one. Sometimes we don't have a plan for taking profits. Sometimes we just want to let these things go to the moon if we can, right? We want to give it that opportunity to do so. Not always, but sometimes. But usually we have some kind of plan for, maybe taking part of the position off, or taking half off, or maybe taking the whole thing off. All those details are laid out on the blog post for every one of these trades. If to find it, go to allstarcharts.com, go to the members section, go to the options section. You will find a detailed trading plan for every one of these trades. If you don't have access to that, shoot us an email, info@allstarcharts.com. We'll get you hooked up. All right, quickly. I mentioned earlier, I teased that we put a bearish trade on since we last spoke, and that was in this one, 5 below. I mean, how can you be anything but bearish looking at this chart? This thing is an ugly chart. We put a bearish trade on, and we think that this thing is just getting started on the downside. At least that's our plan. But 5 below is a new trade, a bearish trade. Next up is Reddit. We're loving these fresh breakouts here in Reddit. This was a recent IPO. It IPO'd back in March. We are making, yesterday was a new closing high for Reddit. The first closing high since the initial IPO thrust, right? There's always a little wild action in the first few days following an IPO, but then it consolidated for several months. And now yesterday was a fresh closing high for Reddit. I think this stock has a long way to go. It's one of those names that, if it gets going, for those of you who've been with us for a while, you might remember that Uber trade that we put on end of last year. Uber, I have the same sense with this one as I do with Uber. It's like a sexy name. People love it. People are very active in the Reddit community. Reddit's the home for Wall Street bets and all the degenerate gamblers. And I just feel like it's one of those names that if this thing really gets some momentum going, I don't want to say it's going to become a meme stock, but it has the potential. It has the ingredients, not to mention there's a high short interest. So it's got all the characteristics. I'm not saying that guarantees that this is going to be a winning trade, right? We've been wrong before, and we'll certainly be wrong many more times again. But this has the ingredients that it can potentially become a big winner. So we are bullish on Reddit. Next up, the banks. We're loving the financial sector. We think there's some great opportunities there. We're already in Bank of America, as we discussed earlier. We added some bank exposure this week in Morgan Stanley. This chart is just a 1-year chart, but really the significance with Morgan Stanley is that it is breaking out of a 25-year base. That's kind of unbelievable. I was shocked to know that we were only just now breaking .com level highs for Morgan Stanley, but it's true. And so we've positioned for potentially a long ride here in Morgan Stanley. Again, all the details can be found at allstarcharts.com. All right, I'd like to leave you guys with this slide here. Some people have asked for this, just like a one little slide that encapsulates all the updated stops. So take your screenshot now, pause the video if you need to, but that's a recap of all of our updated stops. And as always, if you have questions about anything that we discuss here, if you want to get involved in All Star Options, if you're not here already, shoot us an email, info@allstarcharts.com. And guys, I mentioned this last week. If you like the charts that I'm sharing here or using, in the last few months, I started using TrendSpider.com. My friends at TrendSpider hooked me up with these charts, and they're great. If you like what I'm using and you want to try something new, go to TrendSpider.com, check them out. And if you use promo code Sean50, if you sign up for their services, they got deals for 50% off their subscription plans using Sean50. So there you go. A little gift to you from me, from TrendSpider. Hopefully that helps you out. Hey, it's July 4th tomorrow. Go America. Enjoy your fireworks. Enjoy your grilling. Enjoy summer. I'm going to be on a little, I don't want to call it a vacation. I'm really just going to be gone one day, but I'm going to Las Vegas tomorrow, going to a concert on July 4th. I'm very excited. So we'll see you next week. Have a great weekend, everybody. Trade them well. We'll see you next time. Bye-bye.